Hello everyone, this is RB3 coming to you with a new investment analysis video. I finished up school last week, so I am off for the summer, so I am going to be bringing a lot more investment analysis videos. And today is the day we have a big book. Incredible Hulk number 181. What can you say about this book? But this is a fantastic book to own. And I mean, this is the first Wolverine, and I can't just say that this is a great book. So let's get into it. Here's the grading data. There are over 8,000 universally graded books. This book is plenty. There's plenty of them out there. And as you can see, the 8.0, if you get an 8.0, you are 50% better than the rest of the grades, and a 9.2 is 75%. So we'll look at what I think here in a minute. As you can look at the sales, the number of sales these books they're selling. So yeah, there's definitely availability, and you can always find one of these at any auction. Any auction is going to have this book of some type. So let's take a look. We're going to look at the 8.0, the 9.2, and the 9.6 today. So here we go. Here's the 8.0 sales. Doing pretty good, not too bad. 9.5% over 15 years, 12.3 over 10, 16.7 over 5, and 15.3 over 3. So not bad return. It's a steady book, and it's a good solid book. We're going to take a look at the other two here, just do a little comparison. Here's the 9.2. The 9.2, again, a solid book. You know, you're getting a little less over the 15, I think it was. Yeah, a little less over the 15 at 8.6. 10 is at 10.3, 5, 14.2, and 3, 18.5. So still good solid numbers, not too bad. Better than your bank account, I can tell you that much. And here's the 9.6. Amazingly, if you take a look at this, in the years 2004, 2005, 2010, and 2011, this book took some hits. And you look at those dates, the 2004, 2005, 2010, and 2011. I mean, look at that compared to the 9.2. The 9.2, yeah, had a little $50, but and then take a look at the 8.0, a little $15 hit there. But the rest of the years are all positive gains on average. So this book right here, going right now, this is about a $10,000 book. But take a look, over 15 years, it's only brought 4.7. I mean, if you look at it for inflation cost, 2.5%. I mean, that's right there. It's close to a 30-year T-bill interest rate. So you could have put your money in a 30-year T-bill, and you could have made that 2.5% with no risk. Yeah, you wouldn't have had the enjoyment, but I think I probably would have liked the book anyway. Instead of seeing something, a monthly statement saying, you know, this is what you got on paper. And anyway, I guess they're both on paper, huh? 10 years, 5.8, 5 years, 10.4, and 3 years, 16. So this is my thought on this book. I didn't compare the other grades. After I did this last night, I was working on this at 1 o'clock in the morning, finishing it up. Because there are actually thousands of records out here on this stuff, and compiling them takes a little bit of time, but I want you to take a look at other grades. But if you take a look at this, at the 9.6, the interest return, the 9.2, and the 8.0, I mean, they are neck and neck. They're right there at it. There is no really marketable gain in having a 9.6 over a 9.2, really. I mean, you're looking at maybe 2% more. And then compare that to the 8. That's just crazy right there. I mean, the book is being solid across all three of these grades. I'm just wondering, is it solid like that in returns over all the rest of the grades? Because I mean, yeah, why pay for 9.6 10,000 when you could get an 8.0 at 27.50, and you're making almost the same interest rate if you were to have this as an investment. I mean, I'd rather just get an 8.0, set it at a nice 8.0, set it aside, and I'm still making the same return per se as the 9.6, and I could take the rest of the cash, the what is it, $7,250 basically, and put that toward another book. If you were looking at spreading your diversifying, so it makes no sense to go with a 9.6 compared to the 8.0 for interest rate, for interest return. So I'd rather do that. I'd rather have an 8.0 than a 9.6. So anyway, that is my thought. Here's the graph. Before 2000, I think it was 2000, one of the X-Men movies came out, and then you had all the other X-Men's in between 2000 to 2009. Little fluctuations here and there. And then you had the Wolverine Origins in 2009, so you can see a little spike up. I guess a little speculation going on there as people hearing about the Origins of Wolverine movie coming out, and then as soon as it comes out, it just pops, it goes down. And then it kind of takes that U shape there, comes back a little. 2013, you got the Wolverine movie, so again, it's on a downward decline, and then all of a sudden you get the Wolverine movie. It didn't pop as much as the Origins Wolverine, but it did start seeing a little bit of an increase. And then, as you can see, all three books, they just continually steady go up. And then in 2017, you had the Logan movie. And after the Logan movie, you can see all three of these books, they take a different direction. They go up, a steeper incline, I guess you could say. So I guess a lot of people liked the Logan movie. I wasn't a fan of it. It was okay, but you brought in the X-23, the girl, and that was pretty interesting. So are they going to plan on having movies? I haven't seen or done any research on that. Are they going to bring out the X-23 as something future? So that's something to think about. But it did help this book a lot, the Logan movie, it looks like. And then I had another slide I added. I want you to take a look at something and see what y'all think. Let me know what you think. Again, if you see something in the investment analysis, I know it's pretty popular. A lot of people like it. If you see something to add or something to subtract, let me know. If you have any questions, you want me to define something, or maybe look into something a little bit more, let me know. Leave a comment, because I like doing these. Another YouTube subscriber, Reggie, he told me that he likes these. It's definitely something to help you think about when you're buying some of these major books. Again, I am a collector. I love collecting. I love the books. I love the history. I love the stories. And I love the artwork. But when you're talking about sinking some money into some of these books, you want to know that at the end of the day, you're going to get something out of it. You're going to be able to leave your family something, or you're going to be able to use this to trade for something else or sell in case a hard time comes. You just don't want to you buy a 9.6 for 10,000, and then all of a sudden something drastic happens a couple of years from now. You want to know that you can get some money out of it, and not just, you're losing money. So I like this, and I like to help other people see some of this. But anyway, I added this next slide, and this is the annual sales. What I did is I took all the annual sales from GPA. That's the only one that keeps the numbers. It's kind of difficult going on Heritage and counting them all up. That takes a lot of time. But as you can see, toward 2003, 2004, the sales on this was going up. This is the red line is the 9.2, the green line is the 9.6, and the blue line is the 8. So what this is showing is showing how many times this book was recorded as being sold. So you can just look at this and see that there are more copies on an annual basis of an 8 being sold than a 9.2 or 9.6, except for in 2003 and 2004 and 2002 and 2013 and 12, the 9.2 outdid the 8. But other than that, the 8 is going up. And as you can see, over the last couple of years, the 8 has been declining in annual sales, along with the 9.6 and the 9.2. So is this book starting to cool off? I like the idea that if the sales on this book is starting to slow down, you might see a little tick in the prices, and you might be able to pick this book up a little cheaper and see what happens. But yeah, it's very interesting data. I thought about it, and I wanted to see just what how many times this is moving, what's going on with it. Are people picking it up? Are they not picking it up? And it looks like either they're just not coming on the market and selling, or people are just keeping them and waiting for something big to happen. That could be a reason too. That people are just holding on to them, waiting to see what next is going to come out, and then they'll start dumping them again. But anyway, this is the new investment analysis that I came up with last night. Over the last couple of days, actually, I finished it up last night. So again, let me know what you think, what you like, what you don't like. Leave me a comment, and I'll see you next time. Thank you.